Boom! If you've been paying attention to the channel, I told you watch out for Friday. Big news coming out, and the markets did not disappoint as we saw lots of fireworks this Friday. In today's video, we're going to talk about how to approach the markets after it's made these big, ugly, disgusting moves, but of course do so in a safe way. I say so in a safe way because something that happens to a lot of traders is they get themselves into trouble after seeing the moves like this. And the reason is psychological, right? They're on social media, they have a group of trading friends. We actually did this on the platform, not get involved late, but a lot of us had a really good Friday. We were in some bearish dollar positions and we made a lot of money going into the weekend. And for someone that maybe wasn't in that position and they're feeling like they left money on the table or they just missed out, it's very easy to want to click that button very, very late and get involved. And if you've been paying attention to the channel here, we spoke about this a few videos ago. Those traders are nothing but bait, right? But the traders that enter at the end of the move, they're nothing but liquidity and bait for the traders that are trying to make profit out of the move. And that's not what you want to be as a trader. So my approach is typically this. After you see these moves, look for a little bit of relief. Look for the counter trend trading opportunity. I'm a little bit biased as well because I'm a counter trend trader, but we're going to show you a few examples on how to handle those situations today. And then obviously you can pick and choose which you want to use. Now, real quick, just for the trend continuation traders out there, because I'm not going to go over any trend continuation opportunities, the way we would approach that is simple, right? Find your high of this move, wait for a violation of that high, and then either look to buy it there or wait for the pullback and the extension higher. Now, I just did a video on triangles and what versus where. If you saw that, remember the location matters most, so always take that into account. But let's start looking at the counter trend move here, right? And way number one is going to come here on the euro dollar. Euro dollar has given us a little bit of a bullish move up to end the week, just a little jump from 116s even to about 117.30s. Again, for you guys that traded the Gartley pattern, hats off to you. Good job there. I was involved in that trade as well, but it's my youngest's birthday this Sunday, so all of that's probably going to go to presents and stuff like that. But anyway, what we're looking for here is to redo our IPDE process, right? So identify where has price action come to. Well, price action came right to a previous level of structure resistance. Funny, even after fundamental news, it's funny how these things often come to a stop at technical levels. Just saying. And what we've done here is we've put in 2/3, there we go, if I can math the right way, 2/3 of what's called a 3-bar reversal. A 3-bar reversal is one of my favorite reversal patterns in the market. And what we're looking for, hence the name, is three things. We're looking for a high momentum candle, we're looking for some type of rejection or loss of momentum candle, and then we're looking for a confirmation candle. So in this case right here, think we can call this a high momentum candle, right? Big green candle, moved a lot. Yeah, pretty straightforward. This red boy up here is going to be our rejection candle. Again, you can tell by the wick that price at one point pushed up to those highs, but then the close in the bottom third of the candle shows us that the bears pushed it back down. So a little bit of rejection from the sellers. And then the confirmation candle, at least the one that I look for, would be a lower low, lower close. So I need price action to both break and close below this candle right here, and that would be confirmation. So if we can get something like this, obviously this would be a red candle, I just don't feel like changing the color, that will be a good sign for a potential short to play out a little bit of relief. Now again, when I say a little bit of relief, we're not looking for the market to continue all the way back down here. I'm a structure-based trader, so I'm looking for the market to continue to the next relevant level of structure, and we'll dig into some alternative target reasons on a future pair. So pound dollar, similar situation, and again, you're going to see this across the board with almost every dollar-based pair and many of the non-dollar-based pairs as well. This is what it is. You can see a similar situation right here, high momentum candle, again, rejection candle, maybe an inside bar as well. I got to check this. But in this case, we're going to go down to the hourly. And you can see on the hourly, we have a little bit of a clearer picture. And this is a good example of just the importance of being able to read a price chart. So if you are an aggressive trader, maybe you don't feel like waiting for the lower low, lower close on a higher time frame, this is actually going to be a potential at market sell right here. And again, if we read the story that price action gave us, one, we had our high momentum bullish candle. We then had, right, a rejection candle up here, wick to the upside, close at the bottom. We had another rejection slash doji candle right here, indecision. Market tried to escape it with another bullish candle, right? Bulls tried to make that secondary rush up, and then they got rejected as well, right? No doubt these were some of the late buyers that were kind of feeling bad that they missed out from this move. We then had a bearish candle, which pretty much just offset the bullish one before that. And then this is the one we just spoke about, that lower low, lower close, where not only did we break and close below our previous red candle, but really the lower support zone that we created right here within the last 4 candles. We then followed it up to end the week, and you can take that for what it's worth because it's Friday afternoon, with another rejection candle. Even though this one is bullish, you can still see that the market tried to push up and then end it down here. So if you are someone that wants to sell at market, maybe you don't want to wait for a little bit more confirmation, this could be an at market selling reason right here on the pound dollar. The next one we're going to look at is going to be the dollar yen. Again, similar story, big bearish candle, a little bit of indecision right here. Once again, we're going to go down to the hourly and take a look at this. So as we kind of go through different ways to handle this one, I'll give you 2 examples on this one. One, a conservative way to approach this would be waiting for a double bottom, right? So price action rallied down or fell down, whatever it is. We created an initial bottom right here. If I can get my arrow button working, button, it's still not working. Come on, Nikhil. There we go. We then retraced a little bit off of that level. If we were to come down, return, and get another hold at this zone, this would be something called a double bottom. This is a classic reversal pattern in the market. It's a classic conservative reversal pattern in the market. A lot of words merging together right here. And that would be a safer way to get involved in the market. An even safer way after this would be waiting for what's called a 2618. And this is what I would be personally waiting for in this situation. Now, my rules are a little bit different. I'm very conservative and I have some very strict rules. But the fact that even though we're at structure, right, we're still holding this lower level of structure. The fact that we broke this level of structure says that I can't be involved in a bullish trade until we get a certain signal, and that certain signal for me would be a 2618. So we would need to come down, get a completed invalid double bottom. We would then need to rally back up, right? Violate these highs. That's going to give me a rotation. So that's going to tell me that, hey, this bearish move is done, and I can now look for a potential bullish move to happen. Then I would need to wait for a retracement back into this level, and of course, a reason for entry to trade it up. Now, the hard part about this is where are we going to take targets? And I wanted to do a range bar video so bad. I had someone comment under a video last week that said, hey, Keel, can you show us a video where you use range bars for structure? And I thought this would be the opportunity. Range bar charts are a little bit different. Minute charts are this, right? Each candle or time-based charts, I should say, each candle here is based off a certain time duration. So I'm currently on the hourly, which means every single one of these candles, no matter how big or small, existed within a period of exactly 1 hour. The next bar does not print until the next hour occurs. On the range bar charts, it's a little bit different. Instead of being based off of time, they are based off of movement, and tick charts are the same way. So this is what am I on? It says 270, but it's really a 27 range, right? Trading View, I'm used to NinjaTrader. Trading View uses micro pips, so you got to add that 0. But 270 means this is a 27 range bar chart, which means each of these candles has a range, a high and low, right? The range of the candle of 27 pips. And a new candle does not complete until price breaks out of that range. So what you'll see if you look at the timestamp below, you'll see that this first blue candle up here, this was 5:26, and then the next one was 10 o'clock, right? So there's about 5 hours between these two candles, right? And the next one was 10 and 4 seconds. This is the big move. And then like these next, 1, 2, 3, 4, 5, 6, 7, 8, 9 candles happen within like the next 20 minutes. So there's varying degrees of how fast the candle prints, but they're all the same range. Point of this story is typically what I'll do is when you get big disgusting moves, especially moves with like that are really wicky on the chart, if you want to break this down and be like, is there a place in here that I can shoot for targets? Was there a retracement or anything like that? I go down to the range bar charts because it will often break up these moves. However, because Friday's move was just a direct move, right? Straight from the high to the low, do not stop. There is nothing I can use for that. So a little bit bummed about that, but that is an example of how I would use range bar charts to get a different look at structure. And again, if I find something during the week that I can use as an example, I still want to do that video because you guys seem to be very interested in range bar charts. Speaking of which, if you are interested in any subjects that you want me to cover, as always, leave it in the comment section below. I do read through each and every one of them. I love making videos and talking trading. I'm a technical nerd, so all I need is an excuse to come in and talk about something. So we don't have structure per se on this red candle to help me select targets, but we do have previous structure. And if I look at the journey that price action put in on our previous swing low to swing high, there is a certain level that stands out. Can you see that level? Before I give it away, can you see that level? I'm going to draw a box. You may want to pause the tape and write down and play the guessing game of can you see that level before I ruin it for you. This is a good practice to get better at your trading. I'm going to do it now. This level right here. Theme of our show today has been rejection wicks, and I see two big rejection wicks right here, which means the market came to this level, bang, had a think, tried to reverse, and the bulls said no, right? Levels that were important in the past tend to be important in the future. So that is a level that I would have on my radar. I would also like to confirm that with some Fibonacci retracement levels. So I'm going to take my Fibonacci retracement tool. I'm going to drag it from the high of our move right here to the very low of our move right here and see if there's any confluence. And what do you know? There's a 50% Fibonacci retracement level sitting right in the middle. Now, the 50% isn't actually a fib number, so for you fib nerds out there, please don't get all angry with me in the comment section. Why I have the Fibonacci on there, the 50% Fibonacci on there, is because we talk a lot about psychological numbers that end in 00, numbers that end in 50, how they are very important. They tend to act like structure because human brains like those numbers. And here we go. The price chart is nothing more than a visual representation of all of the buying and selling habits in actions in the market. And that means from humans and bots, but humans control bots, whatever like that. Fact of the matter is we like things that are halves. So we tend to value things that are at halfway points, and the 50% is the halfway point. So if you are looking for a target level, this is a decent level right here, and this is a way to do so if you don't really have like a key level of structure within the area that you're looking at. Last warning, because it's approaching soon, Thursday, August 28th, 3-hour online workshop. If you're interested in learning more about price action and digging more into the charts and really making sense of the things that I told you about today, or at least taking it to another level, make sure you register. We're also going to talk about everything else that you need to know if you want to be a successful trader. So it's really a blueprint on how to handle the markets. It's going to be intense because it's only a 3-hour workshop, not a 3-day one. But the last time we did it, the feedback was amazing. So we're going to try to stick to that format. Anyway, seats are almost filled, so do not procrastinate. Register now, because once they're filled, we are shutting down the registration page, and I look forward to seeing you guys on Thursday. All right, until next time, plan your trade, trade your plan. If you want to know more about all the weirdness that happened in the market, go back and listen to the Trading Coach podcast episode I did about the Jackson Hole stuff. And please hit that like button before you leave. That shows YouTube that you like my stuff. Therefore, it will share with you more of my stuff, and it makes me feel good, which is also important. All right, take care. I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.